It is a pleasure to see you again on my CryptoQ Media channel. Before we get into XRP, though, there's this court fight that might drastically change the trajectory of cryptocurrency. The phenomenon is known as the ripple effect. Their main argument is that the regulatory landscape of cryptocurrencies is still in a state of constant flux, and that the continual legal disputes, particularly the most recent showdown with the SEC, make the future of digital assets extremely uncertain. The outcomes of these judicial decisions will have far-reaching consequences, since they will both determine and generate waves. Respectfully considering the larger cryptocurrency market, the main question is, will innovation triumph or will authorities stifle a sector that is still finding its way, potentially motivating additional cryptocurrency initiatives? The Ripple v. SEC lawsuit might bring long overdue regulatory clarification to the sector. For this reason, Coinbase Finance and other cryptocurrency firms are citing Ripple v. SEC in their respective legal disputes with the SEC. Because of this, these companies now have evidence to fight the SEC. However, as is widely known, regulations are soon to be implemented for this sector. Encryption is not going anywhere. From time to time, you may come across writers who have worked on this essay or one similar to it, posing the question, will crypto make it? Is the crypto market about to crash? What on earth? 2014 is clearly not our year. Let 2017 be a distant memory. The year 2024 is just the beginning of crypto's meteoric rise in popularity. Contrary to popular belief, Ripple's XRP cryptocurrency is not a security. Stuart Alderoty has made new accusations. The secondary market for this ticket, according to Stuart, is not a security, just like trading cryptocurrency is not. On the one hand, we have the securities market. You could be asking why Gary wants to turn every market into a securities market when he knows that tokenization is coming and there isn't a clear way to do it. Tokenization, or assets that are tokenized, could be deemed securities in certain scenarios, as Gary previously stated. Gary has to get out of the SEC ASAP. It will be difficult for tokenization to gain traction in the US while Gary is on the SEC, but if he departs, things will change rapidly. The $2.5 billion that Chris Larsen has. As a supply giant, XRP might soon be able to support Ripple ODL. This led to the transfer of 500,000 XRP tokens to Chris Larsen's wallet. As suspicions of hacking resurfaced, XRP wallets monitored his remaining assets, demonstrating that additional XRP tokens had reached exchanges. The amount sent to exchanges since then is 20 million. Data indicates that there are only 5 million tokens remaining on chain following the most recent transfer of 10 million XRP to Binance. Thus, the exchanges are receiving Chris Larsen's XRP. With any luck, on-demand liquidity will soon gain traction, and XRP will continue to enjoy high demand. Pay attention to how fast that escrow settles. Bitcoin and other cryptocurrencies do not belong in reserve portfolios, according to the World Bank. Therefore, this is an area of high priority for the global banking system. They talk about volatility. In their view, less volatility is essential. Central banks shouldn't use crypto assets as a shock self-insurance because their 70% yearlyized volatility is much higher than that of stocks and gold, which offer more reliable custody and safekeeping choices. Can anyone tell me what Ripple is exactly right now? Custody is being improved as a result. This is the correct response. If you look closely, you can see that Ripple is also doing what the banks are asking. Whatever it is that is asking, that is the best that the World Bank or the International Monetary Fund can do. Ripple can't change its path in that way. The numerous dangers connected with projects utilizing crypto assets that are not adequately decentralized, making them vulnerable to substantial control by a governing body or central party, make big investors hesitant to take on and manage substantial exposures to crypto assets. The reason behind this is that their market capitalization and liquidity are significantly smaller compared to traditional forms of investment and currency. Regardless, the derivatives market has advanced risk management. There are now many more buyers and dealers of the most precious digital assets, such as Bitcoin and Ether. Bitcoin, in my opinion, will confront serious problems as we go into a more regulated market because central banks see it as a Chinese cryptocurrency. On the other hand, these establishments typically invest in government bonds and other exceedingly safe assets. In most cases, crypto assets can't perform anything useful on their own, such as generate income or pay interest. There are numerous unknowns and dangers in this hitherto unguarded mental realm. This is so even though DeFi apps and staking both have the potential to bring in money from cryptocurrency assets. But staking is also being considered for XRP at the moment, and I couldn't be more thrilled about that. It will generate passive income on a consistent basis. This one is a big deal for the banking and trading protocols. Investment and trade on a global scale cannot function without crypto assets. Reserve managers will be shielded from unforeseen trade and financial shocks by this. The current low level of adoption of crypto assets is expected to quickly alter as demand grows. In addition, I think the World Bank is acting in a way that suggests they only see two cryptocurrencies as valuable. Did you hear about the stablecoins XRP and XLMO? Please, rather than suggesting that they would receive one, they were suggesting that they would be redeemed and placed at a higher, more stable value. Following that, they will go into the topic of foreign payments and financial transactions. In addition, the interledger protocol will eventually allow for 1 trillion TCS, when before XRP's transaction throughput was limited to 1,500 TCS. That is its primary function, so it will be fast enough to reach every single person on the planet. This new document is an official declaration of war. If you buy Bitcoin early, you'll end up stealing from people who buy later, says the ECB. Based on this Lude logic, the government will impose harsh prohibitions or taxes, in my solid view. The European Central Bank is planning to impose a heavy tax on Bitcoin because, in their view, whales are taking money from new investors or using them to cash out. At the moment, I despise this. Who says early Bitcoin investors should have to fork out cash for taxes on their profits? Why should they pay any more capital gains tax when they pay so much already? In my view, that should never, ever happen. Their next move, after pulling this act with Bitcoin, will undoubtedly involve other coins. On the other hand, some insist that Bitcoin is just a bubble waiting to burst. The European Central Bank does not see Bitcoin having any future relevance. This won't happen if we usher in a new monetary system or if anyone else desires it. They should be able to sell their Bitcoin or London holdings without incurring a mountain of taxes. You can't just go after people who bought Bitcoin first, because they were smart. We were smart enough to buy XRP while prices were low, so maybe the same will happen to it in the future. Just because someone else is paying 100 or 1,000 or more for it now doesn't mean we should have to pay more in capital gains when the price goes up to those amounts in the future. This concept disgusts and disapproves me for many reasons. But the reality is that XRP outshines Bitcoin. You are the reason why my video was noticed. It means a lot to me that you've subscribed and watched my channel. Until then, take care.